Hello and welcome to Meet the Experts, an eToro exclusive series where we interview successful popular investors who will share insights around what has led to their consistent success, as well as sharing some of the challenges that come along with being a popular investor. I'm your host Trishan Salmi, and each and every single month we'll be sitting down with some of eToro's popular investors to really just uncover some of the insights that they have to share around what they've done to both navigate challenging times as well as help their copiers remain reassured in the future. Whether you're new to investing or trading, you are bound to leave this interview with some insights that can help improve your approach. So let's dive straight in. Joining us today, we have Timothy Assi. So could you introduce yourself and give us a detailed rundown of what it takes to be a popular investor?
All right, so my name is Timothy Assi, and yeah, I'm a father of a daughter that's 3 years old. I love just the part of investing. It's something I've learned when crypto started to boom in 2017. And I would say I was not that experienced in investing because I started with crypto, but learned the hard lessons there and dig deeper into stocks the year after. And that's when I really started to, yeah, understand the value of businesses and yeah, how to grow your capital, grow your portfolio by investing in winners, actually, by being emotionally robotic, actually, to the news, to everything that makes noise when you're watching social media, everything. And I also took courses to become better at it and refine my skills. And then I also learned to combine investing in stocks with boosting the portfolio by trading altcoins. And that's really how I branded myself on eToro. Started to post on eToro in 2020. That's also when I started my account on eToro. And I didn't even know about the program, to be honest. I just enjoy talking on the feed about investing, about crypto, and gained a lot of followers. Suddenly, they started to copy me, and I got contacted by eToro, my manager, and he was saying like, are you going to join or are you going to stay just a retail investor? And I was like, I don't know, what's the program? And I started learning about it. And yeah, I got hooked and started to really post more frequently my thoughts. And when the Bitcoin bull market started to lifting off, I was really at the good position with my heavy stocks, but also boosting crypto allocations. And that got a lot of interest at that time. And that's basically how I now continue to structure my portfolio: 80% stocks, 20% crypto. And now been a popular investor since then. Uh, and I became an elite popular investor after doing the CC exam. So when you want to be an elite popular investor, you have to do the exam before leveling up. And that's so far my journey, enjoying the eToro community because I do a yearly summit, and it's been fun being part of yeah, eToro, and seeing now they're doing the EPO as well was great.
That's fantastic. It's quite the journey. And you mentioned how 20% of your portfolio is allocated to cryptocurrencies, and you also mentioned your positioning with altcoins. Could you briefly explain what an altcoin is for the listeners who are unaware?
Yeah, so if you're not familiar with altcoins, you basically have the number one crypto asset, which is Bitcoin. And then, you know, throughout the years, there have been a lot of projects that have tried to beat Bitcoin by being more centralized but faster, by being more protective, more privacy. And every 4 years or so, you have a few altcoins that gain some spotlight, and they try to, yeah, be the or number two or number one of the crypto space. And my job is really to pick those winners and ride the typical bull run that happens every 4 year in the crypto cycle. So yeah, basically altcoins are speculative assets, really small cap assets like penny stocks in the stock market. Only they're really correlated to Bitcoin. So when Bitcoin goes up, you know, most of the altcoins go up as well. Mm, we can dig deeper into what happened this cycle because that's not really the case this cycle. Um, but anyway, altcoins are what they call shitcoins. What you need to focus on is Bitcoin, and the altcoins are really used to boost a bit your portfolio, getting it out without really marrying them, trying to avoid holding them long term, because in the long term, it's Bitcoin that remains the king and the winner of the crypto space.
Hmm. Yeah, that makes sense. That makes sense. So essentially trying to make the most out of the beginning of a bull run. And like why you've mentioned that you've been with eToro since 2020. Why is it that you've stuck with eToro? What is it? You mentioned how you're a fan of the community and these other aspects, such as the yearly summit for popular investors. But what led you to actually choose them as a platform?
Yeah, that's quite funny. I used to work at a physiotherapist cabinet practice because I'm also a graduated physiotherapist. And I had a patient who was talking about he was investing on eToro and copying other people. And I was like, that's kind of handy. I might try the copy feature myself. So I copied actually other people to see how it worked. But the problem is some don't communicate, some, yeah, lost a lot of gains in a few months. Obviously, because I started in 2020 when the pandemic happened and you had that massive crash in March. That's actually when I started on eToro. And then I figured there's so many buying opportunities. I'm just gonna close those positions and start my own portfolio because I had enough skills to like do it myself. And then along the way, I learned by doing more courses.
Okay. No, it's an interesting time to have started investing as well. And you mentioned how you're an elite popular investor. Could you share like roughly how many assets you have under copy as well as your average yearly returns?
Yeah. So last time I checked, it was around $750,000, and my annual returns should be around. Uh, I should double check, but on Bulaware, uh, it's more clear. But it was 18, 19 the last time I checked. But don't take my word on it, because but I know I'm beating the market long term consistently.
Yeah. Yeah, that's fantastic. And to be honest, that's all that matters really. And
Yeah.
like when it comes to when it comes to like investing obviously for yourself is it's one thing. Like anyone can investing for yourself. Yes, it's stressful, but you're only managing your own funds. How exactly do you go about managing your expectations alongside the responsibilities that come from managing that 750K, particularly in times when the market's underperforming?
Yeah, so the number one important part of being a popular investor is to just stick to your plan. And whenever you face bearish times, there's always people trying to talk bad about you or communicate or argument against you, discuss their strategy while your strategy is completely different. And what I've learned along the way is no strategy can be 100% perfect. So, you know, in every market condition, another strategy can be better. In the other market condition, there's another strategy that can be better. But if you stay consistent over the long run, you will eventually outperform the market. But you don't have to change your strategy too much. So my strategy is basically to only buy stocks when they're undervalued and just hold and never sell unless the fundamentals change. And that's exactly every time when the market goes in a bear market. We've seen two so far. Last few months, we had quite a big correction. That's also when I bought. No questions asked, just buy when there's a bear market, and eventually you will outperform the market because the growth stocks usually do better when the market recovers.
Mm.
And just sticking to that plan, in the meantime, communicating with copiers, trying to address what the plan is, explaining what I bought, why, the fundamentals, the strategy. And I noticed each new bear market, less copiers leave because now they understand how the strategy works and they know I'm buying when markets turn red. And that's basically how I'm able to retain so many copiers.
Okay. And I guess, as you've mentioned, you've been doing this for quite a while, and obviously communication is a key aspect of not only maintaining but growing the number of copiers. Has your strategy changed at all over the past couple of years, and what key principles guide your investment decisions? I know you mentioned that you simply look to buy and hold undervalued assets, but is there more to this strategy? Is there more to this approach?
Yes, of course. So there's a few steps to follow before I buy a stock. Of course, one of the most important reason why a stock goes up in the long term is because the business is doing great. So you want to invest in businesses that's doing great. For me, that means every year the re- the revenue must be higher every year consistently. That shows to me there's growth. And when I see that, I will try to look deeper into it, see if it's a company with low debt and with a competitive advantage, as we say, wide moat, something that gives the company an edge in its sector. And when I'm sure that it's a great company, I'm still not buying. I'm just going to calculate the intrinsic value first. And based on that intrinsic value, I'm going to buy based on the corrections it's doing. So when the price dips below the intrinsic value, I will buy. If it dips more, I will buy another layer. And that's the way I buy stocks, in layers. That's for stocks. For altcoins, my strategy has changed a bit because I was very naive at the beginning to invest in altcoins, but that's a mistake. I learned the hard way that you have to trade them because holding them long term usually doesn't end that well. So I've learned to take profits more early and just secure these profits to be protected, to protect the capital of my copiers, because 2022 was a really hard year. That's where I still held a lot of those altcoins. And since then, I've been trying to get out much faster. And so far, I'm happy with that strategy because this cycle it has worked the best for me.
Okay. No, that's fantastic. I guess like with obviously when it comes to like investing, trading, whatever it may be, the conditions are constantly changing, and obviously it's about just trying to, I guess, tweak parts to refine your approach to ensure that you're able to have that consistent success. And the majority, like you mentioned earlier about how your portfolio is positioned, so it's 80% in stocks and 20% in crypto. And you also spoke about growth companies, growth stocks, and how they outperform during times when the market conditions are more favorable. Is there a certain reason why you've decided to still have the majority of the exposure is obviously to the US, but you still have some exposure to the European sector? Could you share why that's the case?
To be honest, I will only invest in strong companies, and in US, for me personally, that's the strongest companies. And the ones I invest in Europe, like ASML, like Louis Vuitton, those are also big brand companies with a wide moat. I don't see any other companies that have like a wide moat like they have in the US. So basically, I just check individually, is the company good? Mostly those companies are in the US, and sometimes you'll find some in Europe, like Novo Nordisk is also a great company from outside the US. Basically, if I see also all the steps, all the criteria are aligning in with my strategy, I will invest in them. It's not based on where they're situated. It's mostly because the business is really doing great, and for I don't know what reason, most of the great companies are in the US.
Okay, no, that certainly makes a lot of sense, and I think. With regards to the question before this one about why you've chosen to focus on the US and still have some exposure to Europe, you mentioned how the markets performed and how it went through this correction period. Like given the current state of the markets and kind of like geopolitical tensions and things like that, how exactly do you think that the market is likely to perform over the next 6 months?
So my assumption is that we'll end the year still double digits in green, because what we saw in the beginning of the year was mostly Trump bluffing with his tariffs, and it did scare the market and me also, to be honest. But we're seeing that the investors are starting to get used to how he's tweeting, how he's reacting to other statements from outside the US. And I think, like, unless there's a black swan event, of course, the market will just continue to climb the wall of worry and make new highs by the end of the this year. So double digits positive for the S&P.
Okay, okay. Well, we definitely have some yeah, we definitely have quite some time to go into the end of the year, so we'll see what's in store. But things have certainly looked promising since things have died down and there's less uncertainty. It's not completely gone, but it has died down a little. And earlier you mentioned a couple of the mistakes that you made with regards to investing in altcoins as opposed to opening short-term positions. Could you share let's say, some of your proudest moments, and what are some of the takeaways that you've had from them, alongside some of the mental challenges that you've had to overcome as you've grown your account?
Yeah, the thing is, when I started in 2020, I also opened a chat room for my copiers. And when the bear market happened in 2022, things were really bad in the chat because we saw Meta, Amazon, Google, they all crashed 40, 50%. And when you sent a message in the chat room, I'm buying, I got so much hate. So it actually made it worse to have this chat during this bear market. But I kind of kept going and sticking to my plan. So I'm kind of proud I've done that. And that's when I bought Palantir below $10, and now it's at 120. I bought Google, I bought Amazon, I bought Meta below $100. Now it's trading at 600 and above. So all these bargains were made during the most challenging times. So I'm proud and looking back at those times that I've managed to, one, continue to follow my plan, and two, also make profits for my copiers. You had copiers that closed my portfolio because they saw I was buying and they thought it was going lower. And then after a few months, they're joining again because they saw it was a mistake. So yeah, that's that's how the bad times were conquered.
Okay, and then also like with regards to actually with regards to actually like growing your portfolio, were there any mental challenges that you had to overcome as the portfolio grew?
Like growing the copy portfolio or growing my portfolio?
Growing your actual portfolio.
No, to be honest, I actually never check at the numbers because it's more important for me, like what do you gain every year in percentage wise. So that's really what I'm monitoring, that I'm outperforming the market, and not really about, oh, my portfolio went down so many dollars or my portfolio is up so much in the last few months. Because all those things, that's distraction. It's for the long term, so you're better off just focusing on your businesses you're investing in, the trades you're doing. That's it. I try not to distract too much into how much the portfolio is moving up and down.
No, it's fantastic that it's fantastic that you have that discipline to not yeah, to not keep a track of how the portfolio fluctuates in terms of the actual dollar amount. Have you always been that way, or is it something you had to develop with time?
So that's basically what I've learned also in the courses I took. Of course, in the beginning, you're more emotionally attached to your portfolio. It's just once you underwent so many bear markets, you start to feel numb about it, start to understand that's just normal, and actually you start to feel happy when the market drops. And that's basically how I felt the when Trump came with his tariffs. The market dropped 21%, but you had Nvidia dropping 40, you had Amazon dropping 30, Meta dropping 30%. That's when I was happy and buying. So I was actually more happy than sad when I saw my portfolio
Yeah,
dump.
that's fantastic. That is fantastic. And as you've been investing for 5 years now, would you say that much has changed with regards to investing today versus when you got started? And if you could, let's say, go back and do all over again, what advice would you give to your younger self?
I don't think it's much changed. You might say it's more influenced by the social media, even more by the news. It's more volatile, and you see the stats. People are not managing to hold their stocks for longer duration of times. It's getting lesser and lesser that people are holding their stocks for 10 years, 15 years, 20 years. So my number one advice would be that you hold your stocks, if it's a good stock, of course, that you hold your stocks much longer and stop, yeah, getting in and out of the market to buy lower. That's the number one mistake most people do. They know it's gonna go higher, but they want to buy lower because they think it's a cheaper price. They can buy more stocks, but actually they get left behind and have to chase. That's for stocks. For altcoins, I would say keep it to the short-term trades.
Yeah, yeah, definitely makes sense. And like do you okay, so do you have any last words of wisdom that you'd like to share with the listeners, whether that be related to your whole journey throughout eToro or just general advice with regards to investing?
Also, one number one tip I've learned is to focus on a few companies whenever there's a good company and it's the dominant player in the space. You don't have to go look for the number two, the number three. All you do is just continue buying that number one company because that's more likely to outperform the other ones. So I would say buy the same companies. You have a few sectors to uh, allocate for your portfolio, and then in each sector you buy the same companies. You don't really have to try to buy three or four companies in that sector because the best company will always outperform the other ones, and your goal is to find the best ones. And if you buy too many of other companies, you'll get distracted, and it gets harder and harder to keep track of them, to yeah, monitor them. And whenever something goes bad, you're too late.
Yeah, yeah, that is very, very true. Because I guess like even I guess like even with regards to tech, you had like several investors on eToro who did a similar thing of over diversifying, and it eventually getting to a point they spread themselves too thin, and they aren't necessarily able to then reap the rewards when, let's say, one or two of those companies really outperform because there are those five to seven other ones which are hindering their progress. But it's been a pleasure spending time with you, Timothy, and hearing some of the insights surrounding your journey, and I'm particularly interested in the whole approach with regards to crypto as it's something that's definitely here to stay. I remember like when it first came around, everyone was like, no, like it's not gonna last that long. Like give it a year. Like no one's going to be talking about it anymore. But it's something that's clearly here to stay, and it's something that I myself will definitely be putting more time into understanding how cryptocurrencies operate. But I've really, really found a lot of value in today's conversation, and I hope that you listeners have as well. And until next time, I've been your host, and thanks a lot, Timothy.
Thank you.
Thanks. Take care. Education is key to developing consistency in the markets, but high quality education is often expensive. That's why we've partnered with eToro to offer free access to the investing course, which is valued at $2,000. If you're serious about building your investing skills or simply want to level up your consistency in the markets, comment learn below and we'll share the details with you.